T-bill auction falls short by 22% as yields continue to decline, and also Bank of Ghana gold reserves rise to 30.40 tons in July, and businesses seek rate cut incentives in 2026 budget proposals. Now let's settle for the details. The Treasury bill market recorded a significant undersubscription last week, with total bids falling 22.12% short of the government target. The development ends a streak of 3 consecutive oversubscribed auctions and comes amid fallen interest rate across short-term securities. Data from the Bank of Ghana shows that the government aimed to raise 8.58 billion Ghana cedis but secured only 6.69 billion Ghana cedis. The 91-day bill attracted 5.02 billion Ghana cedis in bid, out of which 4.99 billion Ghana cedis was accepted. For the 182-day bill, 1.23 billion Ghana cedis was taken from 1.37 billion Ghana cedis in office, while the 364-day bill saw 452 million Ghana cedis accepted out of 490 million Ghana cedis submitted. A market analyst attributes the shortfall to 2 key factors: the government's continued rejection of high-yield bids and the diversion of liquidity into the Bank of Ghana's Monday and Wednesday auctions, which collectively mobilized about 6.2 billion Ghana cedis ahead of the Friday sale. Yields on T-bills continued their downward trend, with the 91-day instrument falling by 9 basis points to 10.20%, the 182-day dropping by 10 basis points to 12.25%, and the 364-day declining by 14 basis points to 13.10%. Rates now range between 10% and 13%, reflecting the government's tight stance on borrowing cost. The Ministry of Finance is expected to seek 4.24 billion Ghana cedis in the upcoming auction as it continues effort to manage refinancing risk while keeping interest cost in check. Now, away from that, the Bank of Ghana has marginally increased its gold reserves to 34.40 tons as of July 2025, marking a 4.09% rise from the previous month and an 8.05% increase since the start of the year. Central bank data shows reserves opened 2025 at 30.53 tons, urging to 30.62 tons in January before posting steady monthly gains. From just 8.78 tons in May 2023, the Bank of Ghana has more than quadrupled its stockpile, a move widely credited with helping to stabilize the cedi this year. The build-up is being driven by the Domestic Gold Purchase Program, a flagship policy aimed at strengthening foreign exchange reserves, bolstering currency stability, boosting investor confidence, and attracting foreign direct investment. The Bank of Ghana previously described the program as an essential tool in effort to diversify reserve assets, reduce exposure to global financial volatility, and provide the economy with more robust buffers against external shocks. Officials say the bank intends to leverage its growing gold holdings to secure more affordable financing, improve short-term forex liquidity, and reduce reliance on external debt market, a strategy market analysts believe will remain key to Ghana's economic resilience in the coming years. The business community is preparing to submit proposals for the 2026 budget to the Ministry of Finance ahead of the August 29, 2025 deadline. And the Ghana Union of Traders Association GUTA is advocating for further reductions in commercial lending rate and tax rate to ease the cost of doing business. The association is also calling for a review of port charges to improve compliance with the tax regime. The Ministry of Finance has invited contributions from business associations, professional bodies, financial institutions, civil society organizations, faith-based groups, and the general public to shape the 2026-2029 budget statement and economic policy. The ministry notes that previous public input have significantly influenced the national budget. With the government expected to present the budget on November 15, industry groups are seeking more favorable financing conditions. The Association of Ghana Industries AGI is pushing for well-defined incentives under the government 24-hour economy program, including specific tax rebate, holidays, and improved access to affordable financing. Commercial banks reinforced their dominance in Ghana's credit bureau landscape in 2024, conducting 13.52 million searches, representing 84.93% of total inquiries, according to the Bank of Ghana's latest credit reporting activity report. This marks a significant rise from 77.38% in 2023, cementing the sector's lead in credit referencing. In contrast, the share of searches by microfinance and microcredit institutions declined to 8.82% from 11% the previous year, while savings and loans companies and other lenders also recorded fewer checks. The report attributes the surge in overall credit bureau activity to rapid growth in digital lending and stronger compliance with data submission requirement. In total, financial institutions and authorized users carried out 29.5 million credit checks in 2024, more than double the 13.7 million recorded in 2023. The monthly average climbed to 2.46 million, up to 16.24% from the previous year. Individuals accounted for 55% of all inquiries, while 44% were linked to digital loan customers, underscoring the increasing role of fintech platforms in Ghana's credit market. Loan data submissions also saw a dramatic increase, averaging 61.1 million records per month, a 190% jump from 21 million in 2023. Nearly all, 99.7%, were linked to individual borrowers, reflecting the rapid expansion of digital credit services. The Bank of Ghana says the growth in enquiries and data submissions points to a deeper integration of credit reporting into lending decisions, improving risk assessment and supporting a more transparent credit ecosystem.